All right, today we are cracking open the books on Robinhood's latest financial report. We're going to skip the headlines and all the noise and go straight to the source, because we want to see what the numbers from their third quarter actually tell us about the company's health and where it's headed. Okay, let's get right into it, the Q3 report card. Now, when you're looking at a massive report like this, you're always trying to find that one number, the one that tells the biggest story. And for Robinhood this quarter, it is a big one. Here it is, $556 million. That's their net income. We're talking pure profit after every single expense is paid for just 3 months. A figure like that, it just jumps off the page and tells you something really significant is going on with their business. But, a number like that is only half the story. To really get it, you've got to put it in context. Let's compare it to last year. When you put that $556 million next to the $150 million they made in the same quarter last year, well, you see, this isn't just growth. It's a straight-up explosion in profitability. So the big question is, where is all this momentum coming from? Well, to find the answer, we have to look at their global growth spree. A huge piece of this puzzle is a very clear strategy. They are growing by buying other companies. Trust me, they have not been sitting still. They've been out there actively shopping to expand their empire. The report lays out 2 major acquisitions just this year. And look, this isn't just about getting bigger for the sake of it. It's a really calculated move to bust into entirely new business areas and, maybe more importantly, new countries, way beyond their original app for U.S. stock traders. And here's a look at exactly what's in their shopping cart. They dropped around $224 million on Bitstamp, which is a major global crypto exchange. That's them planting their flag firmly overseas. Then they spent another $175 million on Trade PMR, a platform that serves registered investment advisors. We're talking a totally different customer base. And they're not being shy about why they're doing this. The report itself basically says Bitstamp is their express ticket to faster expansion in Europe and Asia. At the same time, Trade PMR gives them an instant in to the world of professional financial advisors. It's a classic 2-pronged attack, go global and go pro. So all this growth is pretty impressive, right? But it brings us to a really fundamental question. How does Robinhood actually make all this money? Let's follow the cash, because if you want to understand the business, you have to understand its revenue engine. The company's total revenue for the quarter was over $1.2 billion. And as you can see, it really comes from 2 main places. A pretty big chunk is net interest. That's money they earn from customer cash balances and margin loans. But the biggest piece of the pie by far, at $730 million, comes from what they call transaction-based revenues. Now, that term, transaction-based revenue, is a bit of a catch-all. The main engine driving that massive number is a kind of controversial but totally widespread industry practice called payment for order flow. So you ever wonder how commission-free trading actually works? Well, this is it. When you place a trade on Robinhood, they don't just send it to the New York Stock Exchange. Instead, they route your order to these huge trading firms called market makers, and those firms pay Robinhood for the privilege of executing your trade. And if we peek inside that transaction revenue bucket, you'll see something fascinating. It's not everyday stock trading that's bringing in the big bucks. Nope. It's trading in options and cryptocurrencies. Together, those generated over $500 million, absolutely dwarfing the money made from plain old stock trading. It just goes to show you how vital these more speculative assets are to their bottom line. But, of course, no financial report is all sunshine and rainbows. Public companies are legally required to tell you what keeps them up at night. It's in a section called Risk Factors, and believe me, Robinhood's is worth paying very close attention to. So, after seeing all that amazing growth, you have to ask yourself, what's the catch? What are the potential icebergs on the horizon? Well, Robinhood lays out a few pretty clearly for its investors.
First up is just a dose of realism. The company comes right out and warns that the explosive growth they've had, well, it might not be repeatable. It's them basically saying, hey, what goes up doesn't always keep going up at the same crazy speed.
Second, and this one is the big one, they point to an existential threat to their whole business model: payment for order flow. That engine driving their biggest revenue stream is constantly being looked at by regulators. Any new rules, or even an outright ban, could fundamentally wreck their profitability. And finally, let's be real, they don't operate in a vacuum. The world of finance is hyper-competitive.
They aren't just fighting off other cool fintech startups. They are going toe-to-toe with the established giants of Wall Street, and everybody is fighting for the same customers.
So this really shows you the other side of the coin. Yeah, the company is growing, but it's also navigating this incredibly complex landscape that is just filled with major risks, from these regulatory threats and fierce competition to legal battles and, of course, just being tied to the wild ups and downs of the market. So when we zoom out and put all of the pieces together, what does this report really tell us? What's the big picture for Robinhood right now?
It's really a tale of two opposing forces, isn't it? On one hand, you've got this powerful growth engine that is just firing on all cylinders. They're expanding globally, profits are through the roof, and they're diversifying into new stuff. But on the other side, there's this huge wall of risk. Their core moneymaker is under threat, and they're in a constant battle with competitors and the market itself.
And this push and pull, this tension, is what makes their story so compelling right now. It all really boils down to one final, critical question that this entire report leaves us with. Can their aggressive expansion and all their new bets pay off fast enough to outrun the very real threats that are closing in on their core business? The answer to that question? Well, that's what's going to define the next chapter for this company, and it's for sure what everyone is going to be watching.